Good morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, June 21st. All right, so we had a very large gap up, and then basically the market's kind of grinded higher for the first few minutes, and then I think we had like a one-handle move after 9:30, believe it or not, for like 20 minutes, and then the market just kind of gradually started to sell off with no real selling pressure behind it, but did manage to fade a good 2/3 of that move yesterday. So on a gap up, does it mean anything? Not when the market rolls back over again and sells back off, or at least takes back 2/3 of its move. So no, the answer is that the current analysis that we're viewing, that we're looking for some further downside again, and that means when I say looking for further downside, we want to see our triggers, right? We want to get our targets and our triggers ready. But right now, I obviously don't want to just look to short the market in general. Now, for day trading, it's a little bit different. But yesterday, when I see these big gap ups, it just tells me, well, you know what? You either got to stay away or wait for something really, really good to happen here. You meaning a good trade up, a high probability trade. And to me, yesterday, there was really nothing out there. Now, this week, we have Janet Yellen speaking today. We have the Brexit vote on Thursday. We have to be very careful what we're doing, because things could come out and leak in the interim, so we've got to be very careful. Volatility is starting to expand, so that means your stop's got to be a little bit wider than usual, and if that's the case, then you got to reduce your shares or contract size depending on what asset class you're trading. So I want to get right into it. McClellan Oscillator, as you can see here, we have plenty of room to run here back to the upside and or to the downside here. So we're still looking at -3, -4. So we're basically right now at a neutral state. That's what the McClellan Oscillator is saying. So there's plenty of room on either side to move in either direction. Now, bullish percent SPX, you can see here, it is still on a sell signal. Despite the big move up, it's still on a sell signal, guys. So sometimes what happens is we get this little kind of kiss back up to the 8 and then fail again, and that's what I'm really looking for an ideal short situation. I'm watching, monitoring close for the markets to really see if we get a good signal short, because if we do, a lot of my trading model right now is starting to lean more and more to the sell side. So we'll see. And again, anything can happen here. News can trump the chart, so you have to be aware of that. All right, and here's our advanced decline with volume. You can see here we're still below 0. Even though we had a huge move and then a fade, we're still below 0 here. So this does nothing for me. Yesterday doesn't tell me anything that, oh my God, we're going to new highs. FedEx reports this morning, so that's going to be definitely a good indication of what's to come. If FedEx really beats hard, transports will rally. We'll probably get another rally today. If they, in fact, report lesser than stellar earnings, that could be a sign that for the next quarter, second quarter, which comes in next week, next month, that could be a telltale sign that earnings will be a little bit more dismal than the first quarter. So just keep an eye on FedEx. That's going to be interesting. All right, so let's go right into the charts here. All right, so we are here. You could see that we have our rollover, and even though we gapped up, that gap's going to need to be filled. And I'm looking for that 200. You can see how flatlined it is for the last 3 months. That's going to be your bigger area, your bigger picture, besides that 50 at 207.05. The 200 at 204, just rounded off to 204.35, 38. 204.40. And that's going to be your spot. You can see that all of our indicators are already currently and still rolling over. So just something I want you to be aware of. That's the spiders. Now here's the transports. Transports really not having a great day. I mean, it is not having a great day or a great year so far. M formation, we saw that 127.17 still intact, and you could see here we have that back test into the average, the 200. So it's still trying to get back up. But FedEx will be a game changer for the transports. Okay, if they start to rally, if FedEx rallies and then sells off, or if it just sells off, that's going to be a really good sign that the markets just don't have the oomph to go up, a little push higher to go up anymore. So I'm watching the transports today very closely with FedEx. Here's the Russell 2000, and what can I say? It's just not really doing too well. Here's the 200 at 112.67. That's going to be a big spot along with the 50. So we do have some confluence area of support. So let's keep that in mind and monitor it closely. Okay, you can see that. You see also the RSI MACD started to roll over on the daily. All right, and then lastly, I just want to show you is the Qs. Let me get this out of the way. All right, and last is the Qs. You could see here as well. This to me looks like a really big M formation, right? With a big, with a lower high from this previous high, which I really like. And I'll tell you guys, Nasdaq does not look too good. A lot of those big bellwethers rolled over yesterday. I was watching price action, and it did not do well at all. So I'm thinking this could just be a bear flag here, and then boom, another move lower, testing this little area here, this double bottom. All right, so keep that in mind. That's going to be interesting today. Nasdaq to transports are really two key ideas of what's to happen here. Okay, have a great day, everybody. We'll see you tomorrow. Take care.